if your client is an affluent client and they apply for a mortgage, or if they go to a bank for a savings solution, if the advisor is not part of that conversation, if you're the advisor and you're listening to me on this podcast, your entire relationship is jeopardized, flat out. I'm just telling you, that's the reality of the market today.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast. On this episode of the show, Bob Clare, founder and CEO of Fispoke, is with me for a conversation that I think is going to fundamentally change the way you think about your business and your relationship with your clients. Bob spent 25 years inside Bank of America and Merrill Lynch, and what he saw there is exactly why he built Fispoke. The big banks have a very deliberate strategy to cross-sell your clients every time they walk through the door, and most RIAs and independent financial advisors have no idea this is happening. If you're running a firm today, integrating banking into your business is both an offensive and a defensive strategy. And as you'll hear Bob say, it's also a must as a fiduciary claiming to offer comprehensive financial advice and guidance. It's a great conversation. You're absolutely going to love this episode. Now, before we get to the conversation with Bob, please do make sure you take a moment to subscribe to the Modern Financial Advisor podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest, hit me up. I'm basically at Mike Langford everywhere on the internet, or you can shoot us an email, podcast@finservmarketing.com. Okay. Let's get to the conversation with Bob Clare. Well, Robert Clare, so wonderful to see you. Welcome to the Modern Financial Advisor Podcast.
Thanks, Mike. Thanks for having me.
I'm super excited to be here. It's like, every once in a while, you get somebody who's almost like, mythical. And not to pump you up, but it's like I've heard his name talked about. We've talked back and forth, like via email and text and so forth, but we hadn't met each other, and talked to each other face to face, at least over the screens until last week. Terry Mullen, who I had on the show last year, talked about you, and I think he talked about you before you guys even started doing stuff at Fispoke. So, anyways, the myth is here. It's great. You're real.
The man, the myth, the legend. It's real. But Mike, it's great to be. Thanks for having me. It's great to be here.
I'm super pumped. Well, as I mentioned, just a few seconds ago, Terry was on the show last year talking about Fispoke, talking about the things you were building, but it was kind of a coming soon conversation. It was, like, let's go out there and tell the world about this awesome thing that we're building, and get people, if they're interested, to reach, kind of a little bit inbound type of stuff, have those conversations. Now, a lot has happened since then. You've gone live, right? You've acquired some significant firm clients, and you've built out a pretty impressive roster of institutional partners like Bell Bank, American Express, Sage Home Loans, and so forth, and integration partners like a Broadridge, which I love the Broadridge guys, Wealthbox as well. So let's set the stage for those who might not have listened to or watched Terry's episode. Give us kind of the elevator pitch, if you will, for Fispoke. Then let's dive in and see how things have evolved since.
So again, thank you, Mike. And thanks for all the listeners joining today or listening to this podcast. To keep it simple, Fispoke helps independent financial advisors deliver superior banking and lending solutions for their clients. Simple as that. Now, I started Fispoke several years ago because I've long believed there's a major gap in the RIA ecosystem where advisors really need an integrated banking platform to successfully manage their clients' full financial life and allow the clients to achieve their greatest potential. Look, as you mentioned, we've got an outstanding group of institutional partners, proud of all of them. And what we've established, Mike, is a curated group of partners with solutions really built specifically for this market, solutions specifically designed for independent financial advisors and their clients. Also, I should mention, we're fully SOC 2 Type 2 compliant. That's a major change, and we're very proud of the platform that we built. When we take a step back, independent advisors are great at investments and planning. But when it comes to banking and things like high yield savings, mortgages, or really lending, even for their own firms, the options are fragmented at best, are really not built for advisors in mind. If you really think about the market today, there are a number of point solutions So if you think about the range of cash, I'm not going to name individual firms, but there are a number of, I'd say, point solutions, right? They do one piece of the ecosystem.
Right.
Fispoke changes all that. We're a complete banking and lending platform built for independent advisors and their clients. And again, we connect advisors and their clients to better solutions. Again, starting with high yield savings, mortgages, finance solutions. In short, think of Fispoke this way: a TAMP for banking. For advisors, that should resonate. So, turnkey asset management platform has been around a long time, but truly a turnkey banking platform designed for independent advisors. Now, I think what's really evolved since we've started this journey, it's not about products and it's not just about technology. It's about empowering advisors to deliver a more complete financial relationship for their clients.
Right.
In short, our mission's simple: give independent advisors access to the kind of banking solutions their clients expect and deserve, fully integrated superior solutions. And that's why we're here today.
I love it. I love it. It's interesting when Terry and I talked about it. He made the point about a lot of the advisors who have been breakaway advisors who left, the Morgan Stanleys of the world or whatever. Like they had this access to this stuff, and then they go out, to start an RIA because they have a vision for a better relationship with their clients and obviously more control over their business. But then they're giving up all that type of stuff.
Yep.
But kind of on the flip side, and you mentioned this during our prep call, that really it probably is going to light up some of the advisors in our audience, particularly I think some of those breakaway advisors. The idea that integrating banking into your advisory practice is both an offensive and a defensive strategy, because you weren't the first person who said this in the past, but the Morgan Stanleys, the Merrill Lynches and so forth, the PNCs and Wells Fargos and so forth, they are legitimately running like a strategy of trying to acquire your clients. If you go into one of those places to get a mortgage, any other type of loan or any type of banking relationship, they will be pitching you to come on over and bring your advisory business there. And I've actually seen that before. I mean, a long time ago when I was an advisor, one of our clients got more Wells Fargo's mortgage, and then they're like, you know what, we'll give you a much better deal if you bring all your investments over. So this is like a really good offensive strategy. Obviously, I don't want to dive into that, but it's a great defensive strategy as well. So maybe you can speak to it better than I just did. Talk about the kind of threat to independent RIAs and independent broker-dealers, frankly, advisors that are feeling this attack potentially from the big banks.
Sure. Well, let me speak to it, and actually I'll interject my own life experience.
Okay.
I have over 35 years of experience uniquely banking, wealth management, technology, lending. 35 years, 25 years, Bank of America, Merrill Lynch. You mentioned some of those companies, and look, all you have to do is look at the news. All you have to do is look at Bank of America had an investor day in December, right? And the leadership of Bank of America, without naming names, flat out said, look, where we are growing wealth management is going into the consumer or retail bank and taking those clients over to Merrill Lynch. In fact, the CFO of Bank of America said fully more than two thirds of Merrill clients have that bank relationship. So if you're an RIA and you've got a client going to a major bank for a deposit or lending solution, you're at major risk. So I think you framed it well. So look, Fispoke plays an essential role for RIAs, both acquiring and retaining clients. So you mentioned defense. Let's start there. So I think when I think of reducing client attrition, I think there's three key points. One, competition with large banks taking RIAs onto their platforms, like you just mentioned. The second is client retention with wealth transfer to the next generation. I think that's critical. And I think third is AUM retention with integrated lending solutions. Give me a moment to expand on each of those.
Yeah.
So again, that first scenario, look, major banks, regional banks, they're well-oiled machines, right? And I'm not just Bank of America, but Jamie Dimon had the same investor day, I think in January at JP Morgan Chase. And essentially, if your client is an affluent client and they apply for a mortgage, or if they go to a bank for a savings solution, if the advisor is not part of that conversation, if you're the advisor and you're listening to me on this podcast, your entire relationship is jeopardized, flat out. I'm just telling you, that's the reality of the market today. And I think that's a critical understanding. So the reality is our curated lineup of institutional products and partners, we offer higher interest rates for saving accounts. lower interest rates for mortgages and lending that clients can even get at Chase or Bank of America. So not only do we have those products, we have superior solutions. And again, they're designed for you to maintain control of that relationship so it's not fragmented. I think that's critical for advisors to understand. So the result is both a better outcome for your client, as a fiduciary, I might add. I think we're going to get into that a little later. And the risk of losing your relationship is fully removed. So I think that's critical for advisors to understand. Step one.
Yeah.
I think the second place, Mike, Fispoke defensively, think about client retention, the next generation or their heirs, right? And I think we're going to get that a little later. But again, think about wealth transfer and what the next generation expects, fully digital, fully online. All those, we give advisors all of that for their platform. And then third, think of lending solutions. I think they're critical in AUM retention. So without access to structured liquidity, so think securities-backed lending, custom mortgage, or think of even custom credit, private banking style credit. If you don't have those as an independent advisor, clients often liquidate their portfolios or they go to these outside banks, like you mentioned. So when lending is thoughtfully integrated, advisors can help meet their clients' liquidity while keeping all the assets invested. So that's the defensive side. Let's go to offense for a minute because you mentioned that as well. Look, when you go to offense, I think it's endless. Again, if you're an RIA, integrating banking and lending, it's not simply an add-on, right? It's truly a strategic power move. I believe this in my core. Advisors who incorporate cash management credit solutions into their practice gain greater control of the client balance sheet. You deepen wallet share, you increase client stickiness, like we talked about, and you create recurring revenue streams that are not correlated to market performance. Those who ignore that shift, quite frankly, are leaving both revenue, influence on the table. And I think as the market shifts, are going to be left behind because this is a shift that's fundamentally happening in the market, no doubt about it.
Yeah.
Look, a large portion of our clients, you mentioned legacy wirehouse advisors. They're trained, they're accustomed to having the deposit lending products available. And of course, that's a huge shift in the industry, advisors going from wirehouse breakaways to independent. But when they have that shift, they don't have those on their desktop. And yet it's very easy for them to have that conversation, to talk about high yield savings. And again, let me expand. Our high yield savings at the moment is 3.56% APY, 356.
Wow. And
again, that beats anyone in the market. That beats the major banks that are often paying basis points. In fact, there's $4 trillion in deposits that's held away from independent advisors that they're not in the macro, in the market, not actively managing. And so you think, how much money are clients leaving on the table? I fully believe all clients should expect their money to work harder for them. That's the role of an advisor. And I think this opportunity lifts advisors and elevates clients. I truly believe is an inherent good for advisors and clients. And then let's talk about lending just for a moment. So when you think about lending in the balance sheet, we've got numerous examples where advisors are leaving wirehouses and become breakaways or independents, and yet they have those loans held back at the broker-dealer or back at the legacy wirehouse, prevents the client from moving. So again, advisors need those integrated solutions to move the clients over. So it's a market reality. It's a market good for clients. And we're delighted to be able to work with advisors, hopefully many listening today, to deliver these solutions in the marketplace.
I love it. What's really interesting, you mentioned the fiduciary aspect of it, and we're going to dive into that here in a second, but I think it's worth noting how the industry has evolved in a relatively short time, right? I say this almost every single episode, but most of your successful, mature financial advisors right now, and the average age is close to 60, got their start when they were called stockbrokers, right? They got their start in a more product focus, asset management, sales type of role. Right. So they're, hey, I'm gonna create a portfolio of stocks, bonds, mutual funds for you, maybe some insurance products. And that's the thing I do for you. Now, I call myself a financial advisor, but I'm not really advising on all the other aspects of your financial life. Really, I can't, give you banking advice. I can't give you advice on whether you should invest in that, restaurant that your buddy is opening. All those, I don't know anything about investing in real estate, all that type of stuff, right? But we've been moving more and more to comprehensive financial planning. We have been moving more and more to fiduciary-based engagement with our clients, right? It's out of favor to not be a fiduciary, right? Clients are starting to hear that, starting to get it, and they're wanting more. And of course, the business models are evolving too to be much more service oriented. And some are breaking away completely from an AUM model, and that's a different conversation for a different day. But let's dive into this concept of fiduciary and why this is so important. Because in our prep call,
Yep.
you mentioned something, and I'm paraphrasing, that a financial advisor who calls himself a fiduciary but isn't advising on and managing their client's banking and lending situation isn't actually fulfilling their fiduciary duty. And I tend to agree, but I want to give you the kind of yield the floor to you to kind of explain what you mean about that, because we're talking about, not just fiduciary advice when it comes to investments now. We're talking about fiduciary advice when it comes to banking. And that's actually something that doesn't exist anywhere.
Right. So I firmly believe that very strongly. Look, the complete version of financial advice is managing both sides of a client's balance sheet and be able to give advice on how assets and liabilities are interconnected, not siloed, right? So by addressing this completely and holistically, advisors are really better fulfilling their fiduciary duty, and they're propelling clients to reach their goals and their full potential, right? And look, all you have to do is look at headlines. Again, when I started this journey a few years ago, there were headlines, financial planning, they called it the $1 trillion conflict of interest with cash sweeps. I mean, $1 trillion, right?
Yeah.
And you think about that for $1 trillion of conflict of interest, both from an interest rate standpoint, which we're paying basis points, and, conflict of interest as a true fiduciary. This speaks directly to that. I firmly believe advisors have been operating for this gap for two main reasons. Independent advisors. One, Fispoke didn't exist.
Yeah.
we weren't in the market.
The tech wasn't there. Yeah.
But we're there today, right? Okay. So we empower advisors to generate revenue from deposits and lending products if they so choose, if they wish. I also believe the bull run, the last decade or so, and particularly the last couple of years, largely coincided the growth of the RIA segment, right? So the priority has been asset gathering, it's been investments. It hasn't been looking at both sides of the balance sheet. And you can talk about times right now in particular, we're going to get this in a minute, but market volatility and why managing, high yield savings, the full balance sheet is critical. And I'll just end with a slight anecdote. When I actually started this journey, you start a company from scratch, right? And Fispoke is meant to be bespoke, banking and lending, custom, right, for independent advisors. At one point I said, what an idea would be like unbroken wealth. And I farmed an LLC, and I said, that's in my core what I believed at the time, that wealth management's broken. I really do believe that, is that independent advisors must in time really manage both sides of the balance. It's broken. And I thought unbroken wealth is a terrible name for a company. So I went with Fispoke. But that's the truth, is that as I designed this, we built it in a great team and advisors and a board, and we got an outstanding team behind us to really bring this together and empower advisors to become holistic advisors, true fiduciaries in the best sense of the word. And I think that resonates very strongly in the marketplace.
I love it. Yeah, I want to take us on a tiny bit of a tangent before we go on to some of the other things. But as you were talking, I started thinking about some of the other conversations we've had recently with other business leaders in the space who are helping advisors interact and acquire clients or better serve their clients who are business owner clients. And everybody knows like a great amount of the wealth is controlled by business owners. Small business owners generate wealth. They're not just in their portfolios, their business itself becomes an asset. But businesses need banking as well. And this feels like an incredible opportunity for a much richer conversation that goes beyond just like, hey, what's your portfolio look like and what's your personal banking situation looks like. Now the advisor can also reach into the business relationship and offer better advice and guidance there as well, right?
100%. 100%. And I think that, again, to be a fiduciary for your client, look, advisors are really smart people, and some of my best friends are advisors. And when you think about managing the entire relationship, look, every client has banking and lending needs. I mean, I don't care who you are. The highest net worth clients obviously have that. And the reality is providing better banking and lending solutions, managing the entire portfolio holistically is what advisors should be doing. It's not just about the investments. And I think complete advice truly manages both sides, and not just having a perspective and saying, oh, let's just look at the picture. No, let's actually actively manage that for you in an integrated way to give you better solutions is quite frankly why we exist, why we built this company.
Yeah. Yeah. So now you alluded to a few minutes ago, kind of like the current environment, with everything going on in the markets this week, while we're recording this, and we're recording this in the early March. So situations on the ground may change when you're listening to or watching this episode. However,
Sure.
There'll be more volatility coming. There'll be more craziness potentially happening. So I'm sure a lot of advisors are fielding questions on how safe is my money? What's going on? Are we at war with Iran? What happens? All this type of stuff going on in their minds, which is, you get it. Clients get nervous, right? And the reason why they're working with an advisor is to have somebody to call to give them a sleep at night factor, right?
Great.
Now, most advisors have never had the ability to answer the question in a truly satisfying way. I don't think, they're just kind of like, well, yeah, the markets go up, markets go down. But now we have a scenario where Fiserv offers FDIC. This is a really important point I think we want to dive into, FDIC insurance. And people may remember Silicon Valley Bank issue a couple of years ago where, certain businesses and individuals are only insured up to $250,000 per customer. And it became a problem, right? And so the government had to step in and kind of do some stuff. So, but Fispoke, advisors can offer, correct me if I'm wrong on this number, $20.5 million of FDIC insurance.
Right.
Walk me through how that's possible, or the audience through how that's possible, how that works, because this might be the first time they're ever hearing about something that can do that for their clients. That's a big deal.
Yeah, it could be. And I appreciate it. And thanks for the question and the opportunity. Look, we've got outstanding partners. And what we built very intentionally, again, $20.5 million of FDIC insurance with an interest rate of 3.56 APY right now. And again, that's categorically better than any in the market, right? I mean, that's objective, right? That's a fact. We're working with a bank partner, outstanding bank partner, one of the largest privately owned banks in the United States called Bell Bank. And together with Bell Bank, what we designed, it's pretty simple advisors and clients, I assure you. They don't need to open accounts at each bank. When a client enrolls, cash is deposited directly through the platform with the advisor. And we partner with Bell Bank. Now, let me take a minute to explain to ask the question. Any one bank has a maximum limit of FDIC coverages of $250,000. That is true if you're Bank of America, if you're JP Morgan Chase. Any one bank, the maximum is $250,000. But working together with Bell Bank, what we designed together with a company called ModernFi is a program where we work the bank deposits, and then we have about 250 program banks currently. The large number of program banks, it's for the client advisor, it's simple. You open the bank account. What we do is we basically take that and we can work together with ModernFi to spread the deposits, right? And to increase the FDIC coverage. So the deposits remain client owned. They can simply access, monitor, through a single platform, through their advisor. They don't need to manage the money movement between institutions. We take that all and it's a service we provide. It makes it super simple. And again, with the leading interest rate today, this is March 6th, of 3.56 APY, $20.5 million FDIC insurance. And we believe strongly we're going to just increase that as the year goes on, because we know, and back to one thing, there's today volatility, and advisors, I hope advisors are listening. So I think advisors are very busy today with market volatility.
Yeah.
A cash leave is always important. I don't care if it's March 6th or June 6th or September 6th, wherever the market's going to be this year. Cash always plays a role in a portfolio, and not manage that again proactively, I think, is a mistake. And I think clients should expect that. I just think clients haven't had the options before, but I think all advisors should have better interest rates for their clients and better FDIC protection. Simple as that.
I agree 100%. It's funny. I mentioned earlier, like the whole sleep at night factor thing, right? Like, it's so important. I don't think enough attention gets put on that about why you should work with an advisor, regardless of where your wealth level is at. having the ability to go, okay, I'm on track to achieve my financial goals. I can sleep at night knowing that I'm not going to wake up tomorrow and my assets are, been cut in half, right? I am going to be okay, right? And as I mentioned, that Silicon Valley Bank thing that happened a couple of years ago,
Yep.
that woke a lot of people up to like, oh, having my cash insured is important, man. Like, because it can happen. And we've seen, again, going back to the financial crisis and so forth, we see this occasionally. There's some cycles. It'll happen again at some point in time. There'll be a scare in the market and people will want to go get their cash, touch their money, if you will. Knowing that it's insured up to $20.5 million is a pretty big deal. It's a great sleep at night factor. So we also talked a little bit about kind of the evolution of the market a little bit. And you said something during our prep call. I mentioned, a lot of advisors got their start as stockbrokers and for a long time, they were just managing assets, right? Managing investments and portfolio managers, if you will, right? But you mentioned that we want to transition advisors to become more a capital architect for their clients. And I really like that term. And I think you need to have some Fispoke t-shirts, capital architect made. That swag will sell out pretty good. So walk through what that means and kind of how you see this evolution. Because, again, most advisors, this is new stuff to them, right? It really is. I mean, even those who are, CFPs and so forth, this is going to be new to them, having access to banking and so forth, and thinking of themselves as a capital architect versus a planner in a more traditional sense.
Well, thank you, Mike. Look, that's flattering. And I like your thinking. Capital architect is really next on the continuum of financial planners' roles. I believe once you think of a financial planner, again, holistic wealth manager, health advisor, as a financial quarterback, right? That's what they are today, right? You oversee your investments, you lead the other players in the field, right? I love sports. I love all sports. But if you think about just a quarterback, you're leading estate planning, accountants alike, helping clients reach their goals and objectives, right? That's really what a financial advisor does, right? But a capital architect expands on that. It expands on multidisciplinary thinking, where the advisor designs a system with multiple resources can be used. Think of it this way. We're elevating the game. We're changing the game. Every RIA has the opportunity now to become a complete family office, the full range of capital, banking, and lending solutions. Again, we're taking concepts in the marketplace. I mean, these are proven where you have a family office that manages ultra high net worth and does all of that. Well, now every RIA can and should do that. And that's not just me, but I have people coming to me all the time saying, wow, that's a powerful concept. And that's where RIAs should be going, is the complete range of solutions. And again, banking and lending are just a critical component of that. For example, look, I think among the best use cases, high yield savings, you can think of an emergency fund or saving for a major purchase or a wedding or home tuition. Look, from a fiduciary standpoint, no two clients are the same. And where they are on their curve or life experience, they have different needs. But, an emergency fund is one case, borrowing. But again, at a macro level, advisors need to think holistically. And I think Capital Architect does that. And one last point, last but not least, we didn't really touch on this, so I want to interject this now. You think of an advisor architect, and I think advisors should be thinking both for their clients, but also for their practices, right? So one of the solutions we have is called advisor financing, where what we do is facilitate loans, RIAs to either acquire other firms or as a means of distributing equity to their employees. So this capital architecture, in fact, ownership that an RIA is, to expand their ownership and autonomy without sacrificing to private equity. So if you think of yourself as the owner of your destiny, which an independent advisor should, if you think of yourself as truly, owning the capital architecture, I think you should believe the highest and best use for your client, and you should think about your firm. And we think advisor financing is a critical role for that, for advisors to own their destiny and not have to sell out to private equity if they so choose.
Yeah, and it's so interesting. I've been involved in the advisor financing, the transfer of businesses for a while. Talking to a variety of companies in the space. And heck, Terry Mullen, was a founder of a company called Truelytics, which was all about that, at least at the early stages of it, and it kind of grew to something different over time. It's hugely important, right? And on a related note, we talked a little bit in our prep And it was in your deck, actually. I went through the slide deck that you sent over. You have this one Capgemini World Report citing. It says 81% of heirs switch advisors after inheriting wealth. 81%, that's huge.
Right.
And it got me thinking about some other transfers that happen. A huge percentage. I want to say it's like 75% of women, if they're in a divorce, will change advisors, right? So they'll move their money. So there's these big events, and it really starts to reframe the way you think about a banking relationship, right?
Absolutely.
Because people don't like to change banks. I mean, so much stuff is attached to their bank, like payments and all that type of jazz, right? And so not only if we have a banking relationship, does it likely make high net worth clients more sticky, because they're there. So in the event that something happens, they're likely to be there. But as you kind of point out in the deck and some other conversations, it's also a great gateway, if you will, a great way to start building the relationship. Because if you think about most of us, when we're young, we don't have any money yet, we get a job, we get a bank before we get investments, right? We start saving money, we start having our cash accounts in terms of checking and so forth. And then we might have a credit card or some other loan, auto loan, whatever. And then we grow over time in our career with needing investments, right? And that's kind of like, as you mentioned earlier in the conversation, the big banks are doing this, right? Like they're talking to their clients like, hey, you might be ready for a Merrill Lynch account. You might be ready for whatever. So let's walk through this a little bit. Like, what do you see here? How do you visualize this? And how are you talking to advisors about this concept?
Yeah, so it's interesting. So when actually was Bank of America, we designed something called tailored financial solutions, right? And you think about life experience. So I've got 3 children, almost adult children, ages 26, 24, and 22. And I just think about as a dad, with my own kids, right? And look, banking solutions give an RIA really practical, valid business reasons to proactively engage with the client's children at a very young age, right?
Yeah.
And so while the advisor, you said the average age is 60, and but you start with the clients, you meet the clients where they are, you meet the entire family, right? So then maybe an emergency fund, high yield savings account, great place to start. Mortgage, for a first home. No better way to demonstrate value and start the relationship than helping the client's children achieve their goals, achieve their life goals at a very early stage. We've got outstanding lending partners. And again, digital, we're AI native tools, et cetera, for fast approval, simple application processes, which make that friction-free and deliver better solutions. Again, we're seeing a lot of high yield savings accounts, multi-generational relationships. So not only do the adult children have accounts, grandparents are opening for their grandchildren. In fact, they're seeding the accounts as part of their legacy, right? So if an advisor and they have been working for a long time and they've got the financial relationship beyond investments, it really nurtures that and it brings it home. And it also drives the heir, proportionally to really start with the financial planner. And they value that. They say, look, you're helping me be that capital architect, be that solution provider, not just the bank, but you're the one that really helps me deliver that. And I think it's obvious that's a critical role. It's obvious that digital and I think AI solutions, making it faster, seamless, friction-free, is why we exist.
As you're talking through that about, kind of the relationship component of it, I thought of something like, we all have banks and we get emails from the bank occasionally, marketing and updates. Here's your statement for the month. Mm-hmm. Here's some other things that you can do with your bank of whatever account. What you don't get from your bank is an email that says, Bob Clare, my advisor, right, who is talking to me about bank stuff, right? So imagine having that type of relationship with, as you mentioned, the heirs, with the extended family. We see in certain circumstances, I talked to one woman who is in the space and they deal with the Hispanic vertical. And she was saying, it's actually the flip side, right? Instead of the heirs being the next generation of wealth, a lot of times what she's seeing is the younger folks are bringing in the older folks, because the older folks were the first generation immigrants who might not have banking relationships, investing relationships, and so forth. So they've kind of, they're all in kind of cash. And so like the gateway to the older generation is kind of the flip, right? And that, but this is all that type of stuff where you can create
Right.
such a richer conversation and engagement with the extended family, and in a way that is just frankly stickier and likely to be more vibrant.
My own experience at Bank of America Merrill Lynch for 25 years, grow, manage, protect. When you're younger stage, you're growing, then you manage, protect that. And again, what we have built is a truly integrated platform that meets advisors where they are and meets clients where they are in their life journey.
Yeah.
It's not about us. We're really the intel inside. Fispoke is bespoke. We're a custom platform, advisor branded. And it's a great way, Mike, to your point, for advisors to get their brand out there. So Langford Advisors, whatever advisor firm is out there, to establish their name, their presence, their relationship with those clients, right? To extend their firm. Things like an advisor branded credit card, right? I mean, something simple as that. To get the advisor brand, to build that relationship. We think that's critical. And those are all great points you made.
I love it. So let's talk about advisors getting started. And I would do it from two perspectives. Obviously the technical, how do you do this type of stuff? How do I integrate, Fispoke at a high level? Obviously we're not going to go through the complete minutia of it. But we don't have time for a full demo, but I want to get the technical component of it. Like how does it work and how does it integrate with their business and these onboarding clients?
Super easy. Our website, fispoke.com. So FISPOKE.Fispoke, bespoke, bespoke financial service, fispoke.com, or just send us an email, sales@fispoke.com. But I think it's really, really important. We didn't cover this yet. We don't charge a platform fee or any fees for advisors. So it's so easy to get started because there's no need for a contract. Because there's no contract to negotiate, right?
Yeah.
So we say, look, we've got a standard advisor agreement. Again, we're SOC 2 Type 2. We've completed all compliance, everything. It's very, very easy for the advisor to sign an agreement. Again, they're not charging you. In fact, and if anything, we're bringing you revenue or new opportunities. So after the advisor agreement is signed, our onboarding process is really straightforward. We train users at RIAs how to use our very intuitive platform. Again, we're not doing a demo today, but you should think about on your desktop, your laptop, your workstation, fully integrated with your CRM, simple way for account opening. But we train users that begin using Fispoke to, again, strengthen and deepen client relationships. We can also create marketing materials to aid in the conversations with clients without it, and we can show you in part of our marketing materials, look objectively, and again, these are objective facts. When you go with this high yield savings versus that, this is how much your client is earning in interest versus how much they're losing, how much money they're losing on the table. So we have marketing materials. I think it's really important about our company, Mike. We built from our own experience. We built what would we want as an advisor? What would we truly want? So we're not just a technology platform. We have a service team. So we strongly believe advisors don't want to just, hey, I've got a question. Well, don't just call the bank. We've got a service team that we can log in. We can help. We work with advisors. So we're three pillars of what we are. Yes, we're a technology platform. We're a service and quite frankly, a sales team as well with tailored financial solutions. So think of us that way. It's very easy to get started. Fispoke.com, sales@fispoke.com. Look forward to working with as many of your listeners as possible.
I love it. So let's answer one question. So the second half of my question of getting started, that's great that you've made it so easy and you've thought through the onboarding process and then obviously the post, using it process, which is great. One of the questions, advisors might not say this out loud, right? But I imagine some of them think it, is I'm not comfortable with banking conversations. I cut my teeth, got my training, selling, again, stocks, bonds, mutual funds, managing client assets. I've started to evolve using financial planning tools to talk about financial planning so we can make sure that you don't run out of money before you die type of things in retirement and plan for your college payments and all that type of stuff. But this is new to many of them, I suspect. Obviously the people who used to work at a wirehouse, it's probably relatively straightforward. Oh, I used to have banking. Now I have banking again. Great. And they probably just view it as another product. What type of, onboarding from a training perspective do you have that, or guidance do you offer like advisors to get familiar and comfortable with all the different aspects of it? Because, I'm sure many of them, they use it in their own lives. They have bank So obviously they have loans, but like
Right.
they've never had to have that conversation with the clients.
It's funny. Well, the direct answer is a couple things. We've got training videos, we've got marketing materials, our website. You can see all of that. And so those are very direct and simple. Another way for advisors to think about this, for anyone listening, it's an integrated platform that provides a full range of solutions. And again, it's intuitive for wirehouse advisors, for any legacy advisor that was with a large bank or a large
Yeah.
that's broke to become independent. For truly independent advisors, I say this. I'm gonna flip your question around intentionally.
Yeah.
Because I've experienced both sides. I've experienced the bank side, wealth management side. I think intuitively it's much harder for someone just purely a banker to have the investment conversation. They're not trained in investments, right? They're really not trained in financial planning. If you think of it that way, versus a financial planner that really truly trained, licensed to manage the full breadth and depth, I don't think it's that hard. I mean, you're talking about high yield saving, you're about a cash allocation lending.
Right.
These are intuitive. Again, they're licensed professionals, they're licensed trained. It just gives them the full range of solutions that they haven't had before. Again, we've got training materials. We think it's an exciting time in the market because what we truly believe, it's changing the game. It's changing the industry.
Yeah.
We're still small and getting started. I mean, people haven't heard of us too much yet, but I guarantee you there's market demand, there's market need. It's an opportunity to change the game for independent advisors, to give them the tools, the solutions, and not just the technology, but the experience. And again, it's not just me. I'd be remiss if you can look on our website, the advisors we have, the board members we have, the team we have. I could not have built this on my own. I could not have built this without, world-class chief technology officer who's in fact built TAMPs over the course of his career. One of our co-founders, I'll just mention him, Nate Burke, unbelievable, years of experience building, designing TAMPs, intuitively building like a turnkey asset management platform, now building a turnkey banking platform. You mentioned Terry Mullen, our team, every one of us. I think what's very, very different, Mike, is we come at this very different from a quote unquote startup. It's funny. I mentioned I got 3 kids. My oldest is 26. He started his own company. And, my poor wife, she was like pulling her through a couple of years ago. She's like, wait, you're going to start a company. You're starting a company. Could you guys just start one company? Why are you starting two? And so he's one of these 26-year-olds who he's like, hey, Dad, I'm going to do an AI native digital for, AI company. This is 3 years ago. And everyone's like, what's an AI company? He's like, I have an idea. I'm going to go through Y Combinator. So YC. So I'm not sure if any of your listeners know what that is, but that's the place where if you're really going to start, one of those AI startups, you go to Silicon Valley, right?
Yep.
So you go and YC, these are folks like investors, major people, companies like Sam Altman, OpenAI, companies like Instacart, Reddit, all these companies were born out of Y Combinator, right? YC. But I say to my son, I love my son. I love all 3 of my kids tremendously, right? But a 26-year-old starting banking and lending and advising versus people who have 30 years of experience, very, very, very different.
Sure, yeah.
Right? And so what I think is very different, it's a long way to answer your question. We've got training materials and all of that. But we're here to help, and I'd say coach advisors to really understand and integrate banking and lending in an intuitive, friction-free way. Then again, to bring this all together, it's better outcomes for your clients. It's objectively better interest rates, better product solutions, partners, like you mentioned Bell Bank, you mentioned, we've got Sage Home Loans, you mentioned Broadridge. We've got a curated group of partners that are built for this market with solutions built for independent advisors. Not only you're not going to steal their clients contractually, by the way, that's in the contracts. They're not going to they're not going to take the wealth. They're not going to steal your clients. To take that off the table. But these solutions are built for advisors and built for clients in this journey.
Yeah, I love it. There's 2 things I want to kind of wrap up on that I think are just worth noting. One is this is a true first mover advantage in my view. Like we're talking about startup world, startup lingo, right? If you will. Sometimes a first mover gets a lot of the spoils, right? Early adopters, first mover, however you want to say it. Relatively few of your competitors in your marketplace are going to have this when you start using it if you're one of the early guys, right? So if you're talking to, if there's an opportunity where you're competing for the business of a new client, prospect, and he or she or they are talking to multiple advisors, the other advisors are not likely going to put banking, right? Especially if they're looking for RIAs, right? They're not likely going to have full suite of banking solutions there on the table. So that gives you a first mover advantage, which is awesome. But the other thing is it opens up a completely new opportunity to have a more vibrant conversation with your existing clients, right? To expand the relationship, as we talked about before, make it more sticky. But like, hey, I'm coming to you with something new that we've never talked about before, other than just kind of a quick passing glance. Isn't this interesting? Really awesome stuff.
Yeah, I mean, let me expand for a minute. There's a whole range of point solutions, and I'm not taking a shot. I'm just being objective. These are the facts, right? So you could think of cash solutions built for cash, right? There are solutions that were built for securities lending, but they were just securities lending. I'm not going to name the companies, but I think people know who they are, right?
Yeah.
And they're point solutions, but I think it's problematic for the marketplace because if I'm an advisor, man, just make my life easy, right?
Yeah.
Make my life simple. Don't give me these point solutions. How do I do this? And I got to toggle there. And give me the complete banking and lending platform fully integrated into my practice. Again, Langford Advisors, whatever the independent advisors firm brand name is, we're the intel inside. It's not about our brand.
Yeah.
And again, the partners that we built, it's not about their brand, right? Yeah. It's about elevating the advisor experience, elevating the client solutions that transforms the market. And it's as simple as that. Yes, we're a first mover. Quite frankly, I think this will change the industry. I mean, I'd be crazy if I didn't think others are going to try and follow this in some way. But the reality is it's an inherent good. And I'm telling you, I sleep well at night because the following, you think about what we're doing is we're providing better solutions for clients, better for advisors to become true fiduciaries. And think about we're elevating the game for advisors, clients, and I think delivering objective, better solutions for the market. I mean, again, it's empirically a fact when you just look at the numbers. So it's the beginning of a transformation for the industry, and we're excited to be part of this, Mike, together with you and all the listeners from your show today.
That's awesome. Well, that's a perfect way to close this out. So Fispoke.com is the place to go to learn more. They can find you on LinkedIn, Robert Clare. We will have that linked up in the show notes. Any place else, anything else you want to let people know to go check out before we let you go, or is that good enough?
I think it's a good place to wrap for today, but I like to continue the dialogue as we continue to progress. We're super excited to get after it. We appreciate your time today, Mike. We appreciate your listeners, and we're excited to be on this journey and get after it together. As you mentioned, it's a paradigm shift in the market.
Yeah.
We're really talking about a sea change. And it's a huge market, and we're excited to be drivers in this and working with you and other partners across the spectrum. So thanks for your time.
Thank you, sir. Really appreciate you. Thank you for coming on the show.
All right. Thanks, Mike. Have a great day, everybody.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to my man, Bob Clare, for coming on the show and pulling back the curtain for the big reveal of Fispoke out live in the world and available for the Modern Financial Advisor to integrate comprehensive fiduciary banking advice and banking management for their clients. Awesome, awesome stuff. I cannot wait to see how this rocket ship goes because I have a feeling you're going to see rapid adoption across the industry because advisors have been waiting for this. They just haven't had it. Your clients want it. Why not offer it? Awesome stuff. As I mentioned at the top of the show, please do make sure you subscribe to the Modern Financial Advisor podcast on your preferred podcast platform. And what else? Oh, yeah. Be nice to each other. We'll see you next time on the Modern Financial Advisor podcast. Bye.